Okay, so what up, guys? Um, Ghost here again with another daily trade review slash breakdown or market review slash breakdown. Um, Me and my wife did get a new cat, okay, called Goose. We named her Goose, a little nice little gray kitten we rescued. Um, all throughout the video, she kind of messes with the laptop and stuff like that. I think it's pretty funny. Um, but yeah, so. Everybody welcome Goose into the family. But I do want to go back in and review last Friday. Okay. Last Friday was a pretty good day as far as you thank God it's Friday. I'm going to go over and review a setup that is typically A plus on a day like Friday. Okay, now what makes this Friday, December 20th, so special is we had FOMC just a couple of days prior. Okay. And typically on Fridays like this, we're waiting price to have some sort of, end of the week reversal, instead of continuation. Usually Wednesday and Thursday of the week is weekly reversal. Friday can be either continuation or reversal. Just depends on how the market's setting up. But let's go ahead and drop into NQ. I don't want to take too long on this, but I do want to share a lot of insights because this day actually ended up being an extremely um opportunic day. Okay, that makes sense. Um, so notice on the weekly chart here, we are closing kind of as a doji. We're not really closing below any levels here on the weekly. Okay, we're getting rejections to the downside. So like I said, I'm still anticipating price to maybe close below this wick or trade back around this wick. And then we have another retracement back to our all-time highs before then retracing lower to retest some of these levels like 19,888, okay, where these two relative equal lows lie right above, okay, as well as this PD right here, okay. But dropping into daily, okay, notice on the daily chart here, price on Friday retraces all the way into this daily fair value gap here, and this daily fair value gap, okay, or BISI provides support for price here, okay. Notice on Wednesday, Thursday, we create a large, extremely large bearish imbalance here. Okay, so price on Friday opens low forms inside of the daily BPR right here. Okay, notice where's your BPR, balanced price range. It's when a SIBI to the left overlaps with a BISI to the right. Okay, and now let's truly understand that. Okay, that is obviously a bullish BPR. A bearish BPR would be a BISI on the left overlapping with a SIBI on the right. Okay, so in this example here, we have on the daily chart, we have a SIBI to the left with a volume imbalance that gets displaced through with a BISI to the right. Okay, so price on Friday retraces into this level. The BPR rejects and holds price beautifully to go higher. And so now we're looking to fill in this higher time frame imbalance here. Okay. So we're going to get that off of our charts. We're actually going to drop down into our 1 hour chart here. Okay. So looking at our 1 hour, we see Thursday price is expanding lower. We take out this external low here, and then we create a new swing here at 7 o'clock on Friday morning. Okay. Price trades into that daily BISI or that daily BISI and SIBI being the BPR down here. You get a perfect rejection off of this level, and then the next hour expands. Okay, so now we drop into our 15-minute, and now on our 15-minute, we're going to look for price after 6 a.m. Okay, notice teaching all of my students to solely look at price after 6 a.m. So we're going to mark out 6 a.m. to 12 o'clock. Perfect. This is our trade window. Okay. So already going into 6 o'clock, what do we see here? Okay. Our draws on liquidity after tapping our higher time frame PD array, which we'll go ahead and fast forward here. Price is now at this point tapped into that BPR on the daily. Okay. Note where buy side liquidity is. Okay. So we have buy side liquidity here, minor buy side liquidity here, and another buy side liquidity level right here. So notice we're bearish, or we're bullish, excuse me, on a day like today. Already looking at the higher time frames, the logic behind what we're trading here, we are obviously extremely bullish. Okay, price the past 2 days has drawn us into a deep discount, and smart money is going to almost every Friday buy that deep discount back up. Okay, usually for the whole day. Usually days like this, trend is definitely your friend. Okay, so just notice any Fridays um, on FOMC week. Typically, how you trade those Fridays is you trade what FOMC and Thursday provides for Friday. Okay, so if FOMC comes out bullish and then Thursday is a continuation from FOMC, then you can typically expect Friday to then seek some type of discount, and you will usually have a bearish, reversal, and then that day trend all day lower. In this case, we have FOMC and the Thursday following after being bearish. Okay, so then the Friday here, that provides a lot of low resistance liquidity for Friday them to come and stop hunt and take out any short positions from the previous week. Okay, so just keep that logic in mind here. Now, on the 15-minute here, we already note we want to see price trade above these highs here. Okay, we want to see price trade above these highs with speed and velocity, and then come back down to retest these highs, and then quickly expand away from them. Okay, so okay, so I got to sneeze here in just a second, so excuse me for that. Excuse me, that was a nasty one. Okay, but notice here after 6 o'clock, and we are forming a swing low inside of this daily PD right here. We want to quickly see price expand above these highs, providing speed and velocity. Okay, to also retest and then expand away towards draws on liquidity. Okay, so at this point in time, it's after 6 o'clock. This is execution time, so we're going to drop into our lower time frame. Now, let's go ahead and let price play out. Okay, so this is price at 8:30. Price at 8:30 has an expansion. Notice we don't take trade entries until after 9:30. Okay, if we haven't taken an entry, if we have not taken an entry before 9:25 a.m. Okay, if we have not already taken an entry before 9:25 a.m., we do not look for an entry until after 9:45. Okay, now for the more experienced people, taking that trade on days like this, where you can see here during pre-market, okay, price comes into this daily SIBI, and then you can see you have the clear market structure shift pattern down here. Okay, notice how important this is. What am I talking about here? Oh, well, same thing that we just looked at on the daily chart. We have a small SIBI to the left. Okay, this small SIBI to the left that gets broken by this also relatively small BISI on the right. Okay, price then comes down into this. This is your SMR inside of your higher time frame PD array. The entry here is actually your best entry all day. Okay, this one specific function we see here play out right at 7:30 is your ticket to glory. Okay, you can then see after price expands into this gap, price then expands away from it with yet again another with an imbalance with a breaker as well, with this high nested inside of here. Price fails to reach into this fair value gap and breaker. This shows us that we are extremely bullish. Price should leave this area with speed and stops anywhere within this leg here, this first expansion leg, okay, or under this low, are well protected. Okay, now the more probable entry, okay, now that's extremely probable, but majority of you won't understand that one right away, and you're not going to be good at trading it. So I'm going to teach you to trade the opposite one. So you're going to look to take your trade after 9:45 here. Okay, so we're looking price. This is 9:02. Notice how we keep making higher lows, higher highs. 9:30 release should be here in just a couple of minutes. We're going to see how 9:30 plays out. Notice we're going to mark out the quadrants to that for right up here. 9:30 is coming out. Okay, price at 9:30 or after 9:30 comes up, trades into minor buy side liquidity. And now this yellow highlighted area here, remember, was that 15-minute breaker. We wanted to see price trade above this breaker with speed and velocity, okay, and then see price then continue higher, okay. Okay, so notice after 9:30 releases, we expand higher, okay, and we leave initial sell side liquidity right here, being right at the open of the 9 o'clock 1 hour candle. You can see we clearly accumulate, then we manipulate a high. So now we're anticipating sell side to be swept. At this point in time, sell side has now been swept. We fail to close inside of this fair value gap here. Notice price doesn't even take the relative equal lows here, nor do we fill even just the upper quadrant of this 1 minute fair value gap from 8:30. Okay, note this means we are extremely bullish. We should now rally above this high here, as well as through the breaker with displacement, with speed and velocity. Okay, so notice there's an inversion for value gap here and here. We're going to let it play. So price at this point has retraced back into these levels here. I'm looking to buy 3 with my stop loss below this low here. Price at this point has traded above this buy side liquidity here and the breaker. Notice we want to see price respect this bullish for value gap right here and then expand out of here with speed and velocity. At this point, stops can now be the high that forms inside of this imbalance. Continue to let this trade play out. So boom, price trades all the way up into that minor buy side liquidity level. We could go ahead and take one off at that level. So it'd sell one. At this point, stops well in profit. Okay. As this low comes down, retest this fair value gap yet again before then displacing through, leaving another BPR here. Okay. So parceling at the minor buy side liquidity level is key. Watch how heavy the trend is here as we quickly expand above that minor buy side liquidity, as you can see here. And then we partial yet again at buy side liquidity. Okay, so boom, we'd sell another. At this point, stops can be locked as you're trailing towards that last level. You can see here, right during lunchtime, if you want to hold your trade after lunch to your final TP, notice what we have here. Okay, so at this point, stops are going to be below this PD right here, because notice we have a bullish PD array disrespected here above the buy side liquidity. This is a model within itself. Okay, so at this point of your trade, stops are moved well above break even. Notice the SIBI to the left here with this high nested in it. Price trades into an internal liquidity being this imbalance here. Price then inverses a fair value gap right here with the displacement through it here. What does that give you? Your BPR retracement right here. Okay, price wicks into this BPR, expands away from it very aggressively, and then we inverse the SIBI over here without creating a BISI. Okay, so price trades into it and through it multiple times, a little rocky because there was no BISI created here, so no BPR was formed with this bearish for value gap to the left. Here, BPR forms. Why? Because SIBI right here to the left gets broke by the BISI right here to the right. Okay, this is why price retests this and rejects very aggressively. Price then trades above this high. Inside this inverse for value gap, notice the candle bodies. Once we have a candle close or wick above, the candle bodies respect the lower quadrant of this fair value gap. Okay, and then you want to see price expand away from this gap with no candle bodies ever closing back below it. Price retraces below it. Notice now our eyes are on this low here. going into 1 o'clock. See, price is starting to lighten up. Boom. So that is what this trading day would have looked like. Okay. Notice for the more advanced traders, could have took that entry right down there around 7:30, and the entry down here inside of this daily P array, right, with a 50 tick stop, would have been fine. Now, on a day like today, if you go back in and look at the volatility was pretty rough, right? Only because the previous day was an extreme expansion. Now, if you're waiting to be, consistently profitable, being able to trade after 9:45 every day, you can look and see how 9:45 opens up, create a high after accumulating, right? We trade into that minor buy side liquidity, being inside of that 15-minute breaker. Price then expands away from this, turtle souping, which is the sweep of initial sell side liquidity that we left at the open of the 9 o'clock candle. So this is the 9 o'clock candle opening up, making its high, making a low, and then closing higher. So this is an open low, high, and then close for the 9-hour candle here. Okay. So then notice after 9:45, 10 o'clock, we displace above two inversion for value gaps. This creates a BPR. We understand this. We enter here inside of this gap with our stops below the low. Okay. Price then quickly expands away above the 15-minute breaker, as well as then price quickly displaces higher. Okay. After the displacement higher, we tap minor buy side liquidity. We then start to accumulate before then reaching buy side liquidity here. Okay. Notice if we're trying to frame the trade after 12 o'clock, if we're trying to hold runners, you would have wanted to see price close above this inverse and then quickly expand away towards any other targets. Okay. As soon as price closes back below this inverse, you can now almost immediately expect that the trend has changed. Okay. And the bearish PD arrays will now be respected in a premium. Okay. So immediately after seeing this action here, you should likely close your last runner if we close back below this bullish imbalance here with the low side of it. This low should have protected this trend to continue higher after we close below it in validation of setup. Okay. So that would have been my, trade review for December 20th. That's exactly how it all looked at the markets. Okay, if we go back to our 15-minute here, remember this all started from doing our analysis. Okay, so notice where our buy entry is here at 9:45. That 9:45 15-minute candle comes down, takes out the sell side liquidity from 9 o'clock, fails to even retrace into the upper quadrant of our fair value gap there. Price then at 10 o'clock expands above the minor buy side liquidity. We can now target minor buy side liquidity, another minor buy side liquidity level, as well as then our final draw on buy side liquidity being just above 21,697 flat. Okay. Notice as notice as price falls back below these lows here and closes below, we sell our last position. Okay. Notice on the 15-minute looks a lot more clear. We clearly have minor buy side liquidity. Oops. There we go. can clearly see where the liquidity lies on your chart. Okay, you know that you're extremely bullish on a Friday, where it's a Friday on FOMC week, and you're basically anticipating Friday to be, or to do, the opposite of what Wednesday and Thursday does. Okay, and so that's exactly what you see here. Okay, so this is how you can align yourself with the higher time frames. Starting from the weekly, the daily, down to the 1 hour, down to the 15 minute, down to the 1 minute. Okay, making sure you're always aligned with what's likely to happen throughout that time period is extremely important. Okay, so ultimately, this would have been an extremely great day. Um, Another example of an extremely low resistance price run. You can see to the left all this price action here, leaving all the buy side liquidity behind. It's just all trendline liquidity on a higher time frame, right? Which sets up for an entire day to be extremely bullish. Um, so that's that. Hopefully you guys have learned something from this video. Like I said, the true quarterly theory mechanics course plus lifetime access to the private mentorship is only $85. You can join the free Discord that is in the description of this video. And inside of that free Discord is where you can, gain access to that mentorship and to that course. Okay, like I said, only $85. And the Discord's free. So first link in the description. Without further ado, hopefully you guys have a wonderful weekend, and see you in the next video. Peace.